Okay.
I posted the link in the group. Like those guys are suggesting, that I just record for them the meeting. Then after I'll post it in the group.
Okay, I understand, but the issue is
So
I need audience to ask me a few questions.
yeah,
I'm just going to behave like
you need it.
I will not understand whether someone has understood or not. If I just, but since you're here, I think you'll be just good enough to represent. You will be able to ask any questions I have not understood as we move on. So, so you can start. Okay. I chose errors and
let's
okay. I chose errors because um, your group through the needs had reached me some time back, and they needed help with the suspense account. So since I'm likely to be focused with year ones with these online discussions, we are still talking about it, but it's not too early to start. So I will start with errors, and we see how we can go about it. We shall be seeing other topics as we move on. Okay, so I remember sharing with you the question. I don't know whether you guys have the question. Let me share it here.
I didn't have the question.
Okay. So this is the question. Maybe I can talk about briefly something to do with errors. Now, of course, for something to be an error, it can only be because you know the right thing. So you won't be able to detect an error in an entry or in bookkeeping if you don't know what they actually do with bookkeeping. An example is if we are saying someone started business with cash 20 million. If you don't appreciate that what we have there is the cash account and the capital account, and therefore we're going to debit cash and credit capital. If we came and told you that the owner of the business or the bookkeeping was done such that they credited cash and debited capital, you'll not be able to appreciate the error if you don't know that the right thing is to debit the cash and credit the capital account. So so that's the brief. With errors, you need to be knowing the right thing that you should have done. If you don't know the right thing, then you can't do errors. So that leads us to the types of errors. There are so many, but they are classified into two. There are those errors that affect the trial balance, and there are those that don't affect the trial balance. The ones that affect the trial balance is clearly when you break the rule of or the accounting concept called duality. If you break it such that maybe you only debit and you don't credit, or maybe you debit twice instead of debiting and crediting, or maybe you credit a smaller amount and debit a bigger amount. So all those, as you appreciate, there are errors that affect the duality, the debit and the credit. Where we say for any accounting statement, the entries are to debit and credit and should be with the same amount. So that's the type of error that affects the trial balance. There are many. I've talked of just giving one entry. I've talked of overstating one amount in one entry, and any other that we shall come across. Then the other type of error is the ones that don't affect the trial balance, where we see the duality or the debit and credit is done. It could be done in a wrong way, but at the end of the day, it's done. For example, like the first example I gave, if somebody debits cash and credits capital, that's the right entry you would have done. But the error could be that instead of debiting cash, he debited capital. And instead of crediting capital, he debited cash. Now that error will not affect the trial balance. So as you appreciate, somebody has done the duality. Yes, the accounts may be wrong, the ones that he has debited and credited. Therefore, it's an error, but it will not affect the trial balance. By the trial balance, I mean you look at the debit entries or the debit balances and credit balances. If the totals are the same, then that error does not affect the trial balance. At the end of the day, the debit is equal to the credit. So those are the main types of errors. Other names that they give them, like error of omission, error of commission, error of single entry. Those are names. But just like the names put it, you will appreciate that this is a particular error because it was done like this. So I didn't want to go into detail defining what each error is, but as we do the question that I have here and the one that I shared with you guys, we shall see if we can classify some of them. So I hope we are okay till that part. Kenneth, give me some feedback. Maybe before you say
Yeah, you
something,
can proceed.
suspense account comes in whenever you have errors that affect the trial balance. Okay, the suspense account comes in to fill the side that is less, so that at the end of the day you have the debit side being equal to the credit side. So the suspense account, you only talk about it when you're talking about errors that affect the trial balance. Like I've explained to you, the suspense account is more of a balancing account. The side that is less is where it goes and fills up the space, so that the debit is equal to the credit. So Kenneth, any feedback as we move on, as we start on the question?
You can start the question.
Okay. So the question, always with accounting questions, always look at the requirement first. Because if you find yourself that you can't understand what is in the requirement, then there's no need to do that question. Otherwise, you will backfire. So the question says, give journal entries to correct the above error and balance the suspense account. So here, already they're telling you, if you're seeing suspense account somewhere, they're already telling you that there's some errors that affect the trial balance. They're telling you to create journal entries. With journal entries, I hope we are okay with them, that you know the specific accounts we are referring to, and you know the amounts we're talking about, and then we know which account to debit and which one to credit, as we shall see. So we can move
Okay.
straight and see uh, question one. Maybe before that, let me insert the table. Insert the table I'm having. I'll have yeah, two columns. I mean three columns, where one will give the detail and the other will give the debit and the credit entry. Okay, so I can go on adding. Okay, go on adding rows as we go on. So uh, part A says we have 17,500 Uganda shillings paid in cash. Paid in cash for a new electronic typewriter, had been charged to office expenses account. So here we're having okay, just a moment. Okay, I think I was being too loud. I've borrowed some earphones. Hope Kenneth you can hear me even though I'm low.
Yeah, yeah, I can hear you.
Okay. So I was reading part A, 17,500 Uganda shillings paid in cash for a new electronic typewriter. This reminds me. I hope you are aware of the items or elements under the balance sheet. Uh, by those I mean you know what expenses are, you know what incomes are, you know what assets are, you know what liabilities are, and so is equity. You need to know those five items because for each of
Good.
those, yeah, for each of those, that's where the errors come through. That you should be knowing that, for example, for an expense, if you have incurred a
Yeah.
cost, say you have paid office expenses, for example, you're saying you're going to debit office expenses and credit cash. Um, if you should be aware that an electronic typewriter, for example, it's a non-current asset. It's not just a normal expense that you just put under your income statement. Okay, so maybe to say something little about that for those who are not familiar with the elements under the balance sheet. We're saying you have assets and expenses. These are always have debit balances. So what does that mean? It means that they increase with the debit and reduce with the credit. Then the other three, where you have incomes, or you can call them revenues or sales. Then you have liabilities and capital. Those are on the other side, on the credit side, and that's because they all increase with the credit entry, and they normally have a normal credit balance. So, having said that, I can still go back to part A and we move on. Then we're saying we have 17,500 paid in cash.
Yeah.
Okay, so we paid in cash for a new electronic typewriter. So here, the
Okay.
entries.
The question, yeah?
Kenneth is saying.
Just for clarification. Just for wait, like a debit. A debit is something that is coming in, right?
I beg your pardon?
Can you hear me?
Yes,
Can you hear me?
can you repeat?
No, I was asking like a debit is something that is coming in, right?
Okay, now that brings me to another thing. I know most of us, when we are studying this accounting, we are told something to do with receiving and giving. But this is how it is. Debit does not
Yeah.
necessarily mean that you're receiving. It depends on the item. And for example, for cash, the receiving bit would work because we're saying money has come in into the business, so therefore I debit cash. There it would work. But now you have a scenario where you're looking at, say, a liability.
Yeah.
Mhm. Now, a liability, if you make a payment, we're saying the money will reduce,
Mm,
but it cannot reduce when you're debiting the liability. You get if say you had a loan of 20 million and you pay 5 million,
mm,
we debit the liability for it to reduce. Now you see there's a difference here. At the end of the day, for cash, we said because you're receiving, we are debiting. But now when you go to liabilities, we are making a payment, money is going out, but again we're saying we are debiting. So the technique or the logic of you guys, most of the people saying that because you're receiving, therefore we're debiting, and because you're giving away, therefore you're crediting, is wrong. Because of what I've explained. So what I normally use, or what could guide you, just small. Um, so allow me to do something here. So we have, I hope you can see what I've typed. We have the debit side and the credit side. Then in the middle, I'll just put the accounts.
Yeah. Mm.
Now, what happens is, like I was explaining, when you have an expense and you have an asset, you have an asset. Then this side, we have sales. You can call them revenues. You can call them incomes. Then you have liabilities. Then you have capital. Okay. Now here, your task really is here. You have to know if we are reading an item. Say for example, let me use this M here that you're seeing. This I. Okay. KL. Okay. K. They're saying a sale of 14,000 was incorrectly credited to HKM's artist, who is a data. Hmm? Now your task in this statement is you need to know
Mm.
which accounts we have, specifically where they fall.
Yes.
For example, here we have a cell, okay? Then we have a data. You get? Those are two
Yeah.
accounts. Where does a data fall? Does it fall under expenses, assets, sales, liabilities, or capital? You can give me an answer on that.
That's it.
Assets, yes. So
Is it?
data, those are accounts receivable. They fall under assets. So your task is to know the classification of the items you have in your what in your statement. So we have a cell which is okay, then you have an asset. Now here, why I've drawn this thing is I'm showing you that when you have an expense and an asset, when you want to think about receiving and giving, this is what happens with an expense and an asset. When you receive or when you get the asset or when you incur an expense, that means these are increasing. We debit them. You get? But when they are reducing, say you're selling off an asset
Yeah.
or now with an expense side, I don't know what can reduce, but we're saying you credit. You get? So therefore, when you
Yeah.
come to a
Like
credit,
basically something else is getting out, right?
yes. eh? So with debit and credit entries, how would you explain them? Really, don't use them as what as the way we normally say you're receiving, your what, you're giving away. No, we rather use increase and decrease. And we're saying when you have expenses and assets, once you see them increasing, that means you're supposed to be debiting them. Once you see them reducing, that means you're crediting. There's nothing like receiving here or giving away. No. The fact is, when I buy an asset, say if I buy a car, therefore the number of cars has increased in my store or in my business. Therefore, I'm debiting. Hmm? If it's an expense, you're saying you're paying salaries, for example. If you're paying salaries or if you're incurring an expense of salaries, you're saying they're increasing. Now, because they're increasing, therefore we debit. Now, when you come to this side of the credit side, as you will notice, I'm not using the word receiving and giving because of the difference I've given you. Because of the classification, when there's receiving and giving away, the entries keep changing. But when I say increasing and reducing, and therefore I'm saying if you're increasing, for example, for the credit side here, we're saying we have sales, revenues, and income, then you have liability and capital. I'm saying the fact that you're on this side, you're saying if you're increasing, they're going to credit you. If you're reducing, they're going to debit. Now, how do I mean? Sales, if you make sales, that means they're increasing, right? So if they're increasing, we are going to credit them. And if they're reducing, we are going to debit them. So, but for sales, just like expenses, usually you don't see that part of reducing unless there are adjustments. So there was an error done, there was an overstatement of sales. Then that's when we do what we want to reverse it with a credit. So, but if I go to liabilities now liabilities, an example is trade payables. Trade payables. Every time you buy goods on credit, this liability will increase because you're not paying money yet you're receiving goods. Now, with that, because your liability is increasing, we are saying you credit. That's why it's on the credit side. Okay, but now if you make a payment to your suppliers, these guys have been giving you goods on credit. Now you've got some money, you're paying them back. If you're paying them back, you're saying the trade payables is going to reduce. So because I'm paying and it's reducing, therefore I'm going to do what? To debit. You get the difference? Eh? That's why I don't want to interfere or to use the
Yeah.
explanation of this is receiving, this is what, this is giving. Rather know that because it's a liability, okay,
Yeah.
it has a normal credit balance. If it is increasing, I'm going to credit it.
Yeah.
If it's reducing, I'm going to debit it. That's how I want you to explain and understand what I'm going to be discussing going forward. So, Kenneth, I don't know whether I've helped out or I've confused you the more. You can ask a question if you have.
No, it's okay.
Okay.
No, it's okay.
All right. So
You
I'll leave
can
this
proceed.
table for us to refer to once in a while. Let me draw another for the question we're doing. Okay. So here I had put particular, then credit. So for part A, I was saying we paid money, 17,500 for a new electronic typewriter. Now here I was telling you that what was the entry supposed to be done before you even complete the question. Here you see clearly that we 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 bought a new electronic typewriter at 17,500 cash. Very clearly. So the entries are the electronic typewriter because it's a non-current asset. So usually it takes the personal name. You don't have to say non-current asset account, then the cash account. No, because it's a non-current asset. Usually it's a personal account. We give it its name the way it is. Now in this case, to take the electronic typewriter account. So here I would expect that because you have bought an asset, therefore your asset is increasing. So we're saying debit the electronic typewriter account with 17,500 and then credit cash account with 17,500 because you've made the payment. That's how we would expect it. So allow me to put it here and say uh, I'll put my electronic typewriter, then have the cash account. Okay, we would have debited it with 17,500 and credited cash is 17,500. Okay, these were supposed to be the entries done. You agree with me on that?
Yeah.
So, but what they do now? What they did, these guys are saying the 17,500 paid in cash for the new electronic typewriter had been charged to the office expenses account. You see, so they're saying instead of taking the money being charged to the asset, which is the electronic typewriter, they instead charged it to the cash, I mean to the office expense account, the error they did. So the error they did was, here I think the network is a bit slow. I think it's taking long to respond. So here instead they said office expenses and charged cash. So for them, this is what they did. Now the question is, how do you correct such an error? For purposes of time, I will not ask for your opinion on this. I'll rather give it so that we save time. But maybe going forward, you'll be able to respond to some of the questions. Now here, what we have done is we are saying what was supposed to be done was this. Select. Okay, it's failing select. Okay, what I'm saying is, I hope you can see the cursor. What was supposed to be done was debit the electronic typewriter with 17,500 and credit cash with 17,500. What these guys did, instead of debiting electronic typewriter with 17,500, they debited the office expenses. Then they did the right thing with the cash. So we're saying the error is in the electronic typewriter and the office expenses. The only way you can recover that is you come under your office expenses and remove that money. How do you remove a debit? We remove it by crediting. So you come and say office expenses. We shall credit the office expense with 17,500 so that it can disappear. Okay, and then debit the electronic typewriter account with the right amount, which is 17,500. Okay, so those are the entries. I showed this part of the working just for you to see, but in an exam or when you're writing, you don't have to do that. They're only interested in the correction entry. This last entry, which is uh, debit the typewriter with 17,500. I think my keyboard is very slow. Debit the electronic typewriter with 17,500 and credit the office expenses. So by doing that, you have corrected the error. Are we together?
Oh, yeah. Yeah.
Okay, so we can move on. Let me put it in bold for you to see. This is what we're interested in. Okay, just that. That's what they're interested in. So we're going to part B of the question. I don't know whether you have somewhere, whether you have it there, you can read for us as I finish here. But if you don't, you can just wait a little.
I don't have.
So part B of the question says, okay, now as you observe, part A did not affect the suspense account, and the reason is they did a debit and a credit. They did it, but the problem is instead of debiting the right account, they debited a wrong account. So what we do is we go to the wrong account and remove that money and take it where it belongs. That's what we have done. We're saying the office expense had a 17,500 debit entry. So we're saying let's remove it, therefore credit it, and take it where it belongs, which is the electronic typewriter. Hence debit the electronic typewriter with the 17 and credit the office expense with the 17,500. Now part B says drawings amounting to 12,500 by check were completely omitted from the accounts. Okay, now this is what we call an error of omission. An error of omission does not affect the trial balance. They have not done the debit, they have not done the credit entry. They've just ignored the whole thing. Now what we do is we just come and do the right thing. At the end of the day, the right thing was we were supposed to. What are the entries, if I may ask? Kenneth.
Drawings.
Mm-hmm.
Drawings.
You know what do we do with drawings? If someone
We go
withdraws,
to drawings are for personal use, right?
yeah.
Yeah, so basically it is drawings are like you are debiting, is it?
Mm-hmm. And
Yeah,
if you
you're
withdraw money
debiting
from the
drawings
business, which two
and you're
accounts do you look
credit.
at?
Come again?
If you withdraw money from the business for personal use, what are the entries? What are the accounts first of all?
Is it drawings and drawings and I'm not quite sure.
And the money can be either cash or bank, okay? Great.
Yeah, so for this case, is it drawings and check?
It's drawings
Yeah.
and bank because they use
Is
the
it the
check.
drawings and the check?
No, it's not a
Yeah,
check.
bank, yeah.
It's bank, eh? So the entries were supposed to be
Yeah.
debit the drawings account and credit the money, the mode of payment, which was bank. Eh? So here you come and say
Yeah.
drawings account, you debit it, I didn't see the amount, and credit the bank account. Let's see the amount, let me check it again. So it is 12,500. So as simple as that, that was the error of omission. They didn't do anything, so when you're correcting it, you just do the right thing. You just do what they were supposed to do, which is debit drawings and credit bank. So we can go to the next item, which is part C. Part C says a purchase of goods from M. Kinan for 25,000 was credited to the account of N. Kanin. So here, as you appreciate, the differences on the accounts. Eh? And okay, you have heard of personal accounts and non-personal
Yeah.
accounts. These are common with trade receivables and trade payables. It's personal account if they're using somebody's name. Then it's non-personal if you're using a general bit of it. For example, here, since they are both suppliers, therefore they are creditors, or we can call them accounts payables. So you find that generally, if you go to accounts payable, the money will be balancing. But when you go to an individual's account as an individual, you'll find that someone is being cheated. And this is what happened here. That we made a purchase of goods. By the way, what are the entries? When you make a purchase of goods on credit, what are the entries?
Yes,
Purchase of goods on
purchases. Purchases and cash.
yet some credit.
Come again?
If you make a purchase on credit,
Mm.
there's no cash
Purchase
involved
and
there.
credit. Purchase and credit, what is that?
When I buy goods on credit, we are looking at the supplier's account or what you call accounts payable, okay, or what you call creditors, and then the purchase account. Those are the two accounts that we look at when you buy goods on credit. Are we together?
Yeah.
Yeah. So
We're
what
looking
happened
at
here is
purchases and creditors.
yes, you debit purchase and credit creditors. So here, what was supposed to be done is they're supposed to debit purchases account and credit accounts payable or creditors. Okay, but this is a key point to note. that here we have personalized accounts. You don't just say, you don't generalize them, calling them accounts payable. No, this creditor has a name. So what happened is, instead of accounts payable, you instead had to put a name, and the name is a purchase of goods from M Kinani. You see, so the creditor or the accounts payable right now, he has a name. The guy is Kinani. Hope that's the spelling, because that's what got issues. Kinani. Okay, so instead of saying account or creditor or accounts payable, in this case we have a personalized account as an individual, so you don't generalize him. So we're supposed to debit purchases with the amount that we bought, which is 25,000, and credit the creditor, the particular individual, which is 25,000. This is what was supposed to be done. But what these guys do? What was the error? The error is that instead of they're saying a purchase of goods from M Kinani for 25,000 was credited to the account of N Nanini. You get? The error is in the creditors. That they beg your pardon?
So this thing, wait, are they? The first one is M Chinani, right? The
Yes,
other is N
M.
Kanini.
Yes, here are the names if you can see them.
Oh,
The first one is M Kinani, then the other is N Kanini. That's where the error was.
mm,
So they're saying what they did is they did the right thing with purchases. They debited purchases account with the 20 or the 25. Let's see the amount. Let me check again. Yes, it's 25,000. So they came and did the right thing with purchases. They said we debit purchases 25,000. But when we went to credit, instead of going to M Kinani, they went to N Kanini and debited and credited the guy with 25,000. So this was the error that was done. So the right thing that they should have done is they should have credited Kinani with the 25 and not N Kanani. So how do you correct that error? The error is in the accounts. So you just look at that particular account, in this case N Kanani, who has a credit of 25, and remove it because it wasn't there. How do you remove a credit? Is by debiting. Then go to M Kinani. The man was supposed to receive to be credited with 25, but we didn't do anything. So we take it back. This is 25. So that's how we go about errors. But errors, you first know, before you know the wrong thing that they did, you have to know the right thing. Now, when you know the right thing, then it is easy for you to do the correct thing. So the correction is that we are going to go to N Kanani, who has a credit of 25, then belong to the guy, and remove it. Okay, we remove it by debiting. Okay, it had a credit, so we remove it to the debit. Then do the right thing, which is crediting M Kinani. Okay, Kinani is the one supposed to receive the credit, so we go to his account and credit him with the 25,000. So those are the entries. So what we are interested in, the journals, we are not interested in how we have been showing the right thing, now the wrong thing, now the correct thing. No, we are interested in only and only the correction. What did you do to make the things look nice or go back to normal? That's what we're interested in. So in an exam or in your answer sheet, they may not be interested in seeing how you came about the answer. They are rather interested in the answer itself, which is correcting the error. Okay, so if there are any questions, you may ask for now as we go to the next thing.
You can go to the next.
Okay. So as you're keen, I've not still used this one is receiving, this one is what? This one is giving away. No, I've not used it. Okay. You only know that this
Yeah.
Kinani is a
Yeah.
creditor. Okay. Because he's a creditor, he has a normal credit balance.
Mm.
So since they credited him, the only way you can remove that money from his account, the only way you can remove the credit is by debiting it. And that's what you're doing. So if we can go on to part D, part D says that a sale of goods worth 9,500 made to Lawrence Kirby was correctly entered into the sales day book. The sales day book, which what does it record? Kenneth, general books. If you have the sales day book, purchases day book, what do those two accounts represent or record? These are books of original entry. Any idea?
Not really.
Okay, a sales day book records all sales on credit. Then a purchases day book records all purchases on credit. Then we have a cash or what you call a receipt book. A receipt book records all cash transactions. Then we have also a cash disbursement journal.
Mm.
That one records all payments that were done on cash. So begin with those books, books of original entry. Then okay, if we got to move on, we're saying a sales of 9,500.
Beg your
So
pardon?
hmm?
You said that Southern book records what?
All sales on credit.
The sales, all sales and credit.
Yes.
Then purchases table. Purchases table records all purchases and credit.
Okay. The purchases day book records all purchases on credit.
Then the receipt book all cash transactions, right?
All what?
All cash transactions. The receipt book.
All cash transactions. They use there is a receipt book which records all sales on cash. You have received money. We use a receipt book. Okay.
Uh,
Then for what we call a cash disbursement book or journal, that one they use. That is when you make a payment, cash payment.
when you make a cash payment.
Yes, when you, for example, if you buy goods and you pay immediately, if you pay salaries, you get where we record that information because
Yeah.
there's cash involved and you're making a payment. We use what we call a cash disbursement journal.
Oh, okay.
So can move on.
Yeah, can you?
Okay. So in this case, clearly they were talking about a credit sale. So we sold goods on credit. So, but like you can see, there's Lawrence Mukabi, their names involved. Those are personal accounts. So instead of using the general, say, debtors account or what you call the accounts receivables account, we are using specific names. We're saying this is Lawrence Mukabi. He's a debtor, yes, but he's a personal account. So we have Lawrence Mukabi account.
Yeah.
Then you have Lawrence Mukabi still. How come the names are the same? If the names are the same, then okay, let me read the whole statement and see. We're saying a sale of goods worth 9,600 made to Lawrence Mukabi was correctly entered into the sales day book, but was posted to Lawrence Mukabi's account as 10,600. Okay, while total sales for the month were overcast by 1,000. So here we're seeing there's an error here. Okay, the error is on the amounts, not the accounts. So let's first see the right thing that we were supposed to do before we go to the error. The right thing is we're supposed to debit Lawrence Mukabi's books or Mukabi account. You can call it a debtors account if it was generalized, because he's a debtor. We sold him goods on credit. Then we're supposed to credit sales account. Okay, so but with how much? We're saying a sale of goods worth 9,600. That was the amount we're supposed to put. We're supposed to come to Lawrence account and debit it with 9,600, and then credit sales with 9,600. This is the right thing they were supposed to do. But what did they do in wrong? That's the error. So you come and see error, what they did. The error is that um, that okay, a sale of goods worth 9,600 was made to Lawrence Mukabi was correctly entered in the sales day book. Sales day book is like I already told you, it's a book of general of original entry.
Thousand credits.
Yes, for all goods sold on credit. So they recorded the right amount, 9,600. That's what the book is showing. But when they went to do the entries, they went to Lawrence's account and made a payment of 10,600. Okay, that's what they put.
10,600.
Yes.
So that's the error, right?
So the error is not the entire amount. That's what the difference is. That what they did is
Mm.
okay. Let me, because I call it an error, but I don't think it's an error. Because what they did is, yes, it's an error of putting, by putting 10,000 instead of 6,900 is an error. Okay. Then the sales thingy. Let me see what they did with the sales account. They're saying, uh, then they're saying, while the total sales for the month were overcast. Total sales of the month were overcast by 1,000. What does that mean? It means that also the sales account
What do they mean by that?
by overcast. Overcast, they mean that instead of putting,
Overcast
say,
by 1,000.
that means that instead of putting 9,000, where you put 10,000. Are you saying instead of putting smaller amount, you put a big amount? So that is an
Oh,
overcast. You get it? So similarly here
yeah.
with the sales, what they did is, because you know, from if you have 9,600, when you add 1,000 to it, what do you get? You get 10,600, not so?
10,600.
Yes. So that was the overcast,
Yeah.
the 1,000 difference. So this is what they did in their books. That they went to Royce's account and gave him
Yeah.
10,600 instead of 9,600. Then the sales account still, instead of 9,600, they recorded it as what?
So
10,600. Mm. Kenneth.
So in this case, if it was an under,
Hmm.
can you hear me?
Yes, I can hear you.
Yeah, I was saying
Hmm.
in this case, like if it was an under calculation, it would be 8,600, right?
Yes.
Sorry.
Okay, cool. So this is what they did. Now, how we correct this error is the correction. The correction is that the right thing was with Lawrence we're supposed to have only a debit of 9,600. But when you go to his account now, we have 10,600, meaning that the debit side is bigger by what? By 1,000. So the only way you can reduce this 10,600 to go back to 9,600 is when you credit it with 1,000. You get? So when I go to Royce's account, I'll go on the credit side and put what? The difference, which is 1,000. Okay, so that the 10,000 which is on the debit, if I bring the 1,000 in and it's on the credit, it will offset 1,000 on the debit to go back to the 9,600. So the same thing with sales. Sales has a credit balance, so the only way you can reduce it is when you debit it, so that it goes back to normal. So when you come to sales account, on the debit side, you don't put 10,600, but you put only the difference so that you offset it. So 1,000. So I hope we're together till that part.
Yeah.
So like I earlier said, what I've just shown you, the correction and what that is just really, it's more of a method or what to help you understand. But the marker is interested in the correction only. Okay, what I've got in bold. So we can move on, I guess. But part E. So maybe to comment more about overcast and undercast. The overcast and the undercast, they all go hand in hand with the other part I told you at the beginning, that you must know which classification. Is it an expense? Is it an asset? Is it a sale? Is it a liability? Or is it capital? From there, that's when you can know how you can correct that. Because with expenses and assets, they're only overstated if the debit side is given more money. If the debit side is given more money, then you're overstating expenses and assets. And the only way you can reduce them is by crediting. The only way you can restore the situation. And in the same way, expenses and salaries and means and assets are understated if the debit side is given small money. If you give the debit side small money, it was supposed to be many or a lot, they're saying you're understating the expenses and assets. And the only way you can correct that is by adding some more money on the debit side, which is what we're saying, debiting. Then on the opposite side, it is the opposite. What I've just said for the assets is it's the opposite for the sales. I can sample out one, for example, capital. If you're overstating capital, it means that the credit side is bigger than it's supposed to be. Okay, the credit side is bigger than it's supposed to be. That is overstating capital or liability or sales. So the only way you can correct that is by debiting it so that you reduce the money. Then if it is understating, it means that the credit side was given little money. The only way you can take it back to normal money or give it enough money is when you credit again. So the way you treat these items is different depending on where they fall. So kindly note, classification is very important for your items in accounting. Otherwise, when you begin thinking of which one is receiving, which one is not receiving, that information is not consistent. Okay, it's not consistent. So let's move on. Part E, we're saying goods purchased from that name, Kinuthia and Sons, for 15,050 Uganda shillings, recorded in the purchaser's day book. Okay, once you hear purchaser's day book, you just know that is a purchase on credit. Guys gave you goods, you never paid money immediately. Then they're saying with an invoice. Of course, an invoice is a supplier give once they send you goods and you issue them goods received note, they will issue an invoice. That invoice shows the quantity of goods that you have taken and the amount that they expect you to pay. So an invoice is a document issued by the supplier to the buyer, stating the amount and the quantity of goods supplied to him on credit. That's an invoice. So we're saying, so I was still reading. So we purchased goods on credit for 15,000. It was recorded in the purchaser's day book invoice as 15,500. As you can see, the error is in amounts. You have 1550. Here we have 15,500. So and posted to the purchase account and the supplier's account in the ledger accordingly. So because the sales day book is a book of original entry. Okay, if you make an error in the book of original entry, it means to carry on into the error of the accounting that you're going to do. Just like a receipt book. If you have a receipt book showing 20,000, that means if you're making entries in your accounting system or in your books of account, you're going to use that particular amount because it's the supporting amount. So the same thing with the purchaser's day book, because it's a book of original entry. If it is showing an amount, say 3,000, it's very hard for you to use 30,000 or 40,000 because the book or the proof is showing you only have 3,000, so you put 3,000. So what's happening here is we are saying the actual purchase that we made was for 15,050, but now you guys are recording 15,500. So what was the right thing that they were supposed to do? We start from there. And the right thing is we're going to debit purchases. So debit purchases account with the amount that they did. Okay, what they were supposed to put is 1550. That's what they were supposed to put. Then the supplier. I prefer not using the name, but let me bring the name the way it is. Okay, so this is a supplier. Just like any other supplier, we know that you're supposed to credit them. Credit as accounts payable. We credit them because they are liabilities, not because they are receiving or because they are giving away. No, we credit them because they are liabilities. So we're crediting 1550. So this is what they were supposed to do. But what did they do? Let's go there and see. So we're saying goods purchased from Kinathia and Sons for 50,000 received, no, recorded in the sales day book from the invoice as 15,500. Okay, so the purchases day book says 15,500, but the truth is 1550. So what they do, they posted to the purchases account and this Kinuthia and Sons account accordingly. By accordingly, they mean they used the purchases day book information to record, because those are the books of original entry. So what they did is the error, they're saying purchases purchases, what they did, they debited purchases with 15,500, because that's what the sales day book says. That's the proof they have, and credited the supplier or the creditor with 15,500. This is what they did. But we know the truth. The truth is we're supposed to debit purchases with 1550 only, not 15,500. So what does that mean? Is this overstatement of the purchases account or understatement, Kenneth?
That's right. That's a entry on Cornelius Kennedy and Sons. Is it 1550 or 15500? Like before the error.
Before the error is 1550. What they were supposed to do.
1550.
You
Like
get
what the uh, like what the purchases and Cornelius account.
yes. When you buy goods on credit, what two accounts are we looking at?
Oh,
Yes. So Colonius, like I told you, this one is a personal account because you have used the personal name. So you don't use accounts payable or a creditor
yeah.
account. So, but you treat him the same way you would have treated the what? The creditor's account. So, but you treat. So the amount was supposed to be 1550. That was
That's
the
an
amount.
overcast, right?
So the amount was supposed to be 1550.
Katabazi.
Yeah, that was the amount. Just a moment, Kenneth. Someone has joined in. Yeah.
That is an overcast.
Just a moment, Kenneth. Someone has joined in. Okay.
Can you hear me?
Yes, I can hear you. So you've said it's an overcast. Yes, I can hear you.
Yeah, I'm saying it's an
So you
overcast.
said it's an overcast.
Yeah.
Kari, Kenneth, I hope you agree with her.
Yeah, I can hear you.
So do you agree that it's an overcast? It's an overcast because you're saying you were supposed to debit purchases with 1550 only, but instead you debited purchases with 15,500. So the debit is more. That's what we call an overcast. Just like for the creditor, this Cornelius, he was supposed to be only credited by 1550 only, but instead you credited him with 15,500. So still it's an overcast for what? For the creditor. Now, how we correct that is, like I already told you, you're just going back to what? To make it normal. So if you have a lot, the only way we can remove some money from you is by removing. You have a lot. The only way you can come back to normal is by removing some money from you. So therefore, purchases, because it has a normal debit balance, the only way you can remove money from it is by crediting. Okay, so the same thing with creditor. Because it's a liability, he has a normal credit balance. So we're saying he's overcasted, he already has a lot of money there. So the only way you can remove money from him or from that account is by debiting. And that's what we're going to do with the difference. So you come and say correction. We have this guy with a difference. I think the difference is 450. Okay, 450. Then purchases, we credit with 450. So as you can see, the opposite entries. So I hope we are fine. I can move on to the next item. So like I earlier said, you only consider correction entries. Those others, those are your workings. You don't care. What you're interested in is these final entries for the journals. So I have some 5 minutes left on this link. I don't know how best I can use that time. Because we still have, I think, a lot of stuff here. Still have a lot. Okay,
Maybe
we
you
can.
can just share light on the other side.
All right. We have not been lucky to find any error that affects the suspense account. As you can see, all these errors where you had, if you did a wrong debit, then you have to do a wrong credit. That's what they did. Okay. So these errors do not affect the trial balance, and because they don't affect the trial balance, they don't affect the suspense account. Okay, so you can read the theory about those errors, but they're so obvious. They are straight. Like you saw here, we saw a few errors. We saw an error of omission, where for drawings, for example, where we saw that they didn't do any entry at all. So when you come to do the entry, you just do the right thing, which is debiting the drawings and credit the cash or the bank. Where is it? Drawings. It's here. Okay. Then the other error was the error of commission. Error of commission, what happens is you choose a wrong account. So, for example, here, like we saw, instead of debiting the electronic typewriter or the asset, you debited the office expense account. Those two are different. The expenses and assets are totally different in classification. So, because of that, it's an error of commission. They have a normal debit balance, yes, but it's not still the right thing. So the only way you can correct that error is, of course, you go to the account which received money that it's not supposed to receive, and you remove it from there. So we saw that the office expenses was debited. So the only way you can remove money from the debit side is by crediting with the equal amount. That's what we did here. We credited office expenses with 17,500 and did the right entry for the electronic typewriter. So these errors do not affect the trial balance. That's why you're not seeing a suspense account being involved. Which other error? See, this one is an error of commission where you use a wrong name. Okay, they are both datas, yes, but they are different. And like I already told you, these are personal accounts. They have their names; those are personal accounts. You don't generalize them as accounts. Their datas, therefore, the accounts receivables, all of them end up there. No, each has his own account. So we saw that N Kinani was given money. Is it? It's actually M. M Kinani was debited with the 25,000. Am I saying the right thing? No. The error was N Kanani was given money, 25,000. Okay, that was the error. Actually, it's a supplier, it's not a data. This one is a supplier, a creditor. So when we bought goods on credit from from M Kinani, we instead took pretended or showed that the money or the goods from whom we bought was N Kanani, which is not true. So because it's not true, we had to go to N Kanani's account and remove the money. He had a credit in error, he had a credit. So the only way you can remove it is by debiting. That's what we have shown here. They had a credit here in error. So the only way you can remove it is you come on the debit side of his account and remove that money, 25, and take it to the right person, who is M. Kinan. So these are the errors. You cannot do errors if you don't know the right thing. Okay? You must know the right thing first. Then you know that the error they did is this. Then you restore to the normal thing. That's what I've been trying to show here. So the 6 minutes left. Let me look out for an error of that affects try balance. Just have a feel. Okay, there's this F. This F says a cash purchase
F
of
says, how about purchase of Katabazi?
mm,
I.
I. Okay. I was going to do F, but we shall see I also. Let me first do F. Now F says a cash purchase of tools of 12,300 from Kiduba Hardwares, a supplier, was entered in the cash book only. The keyword here is what? Only. Now, when you purchase goods on cash, we all know the entries that they're going to credit cash and debit the supplier's account. Of course, in this case, we have Kiduba Hardware. It's a name, so it's a personal account. So instead of saying supplier, or instead of saying what? Instead of saying creditor, you will say the real name. Okay. So the man made a cash purchase of tools at 12,300. This is the cash purchase. So a cash purchase, you don't have to think about the supplier because it's not going to be a creditor. We are paying you as soon as we receive the goods. So the credit doesn't come through. So here what happens is you're supposed to have the purchase and the cash account, because there was passing of goods and money. The supplier has nothing to do with our books. So therefore the entries that were supposed to be passed are supposed to debit purchases because you have bought goods, okay, cash purchase, and credit the cash account because you have spent the money. Okay, so the purchase, I didn't see the amount, the 12,000 something. Yes, 12,300. 12,300. So this is what we were supposed to do. We're supposed to debit purchases account and credit cash. We have made a cash purchase. Okay. The source or the book of original entry is the cash disbursement account. I remember telling Kenneth about this, but the rest of us shall see it in our recordings. So this is what was supposed to be done. What they do? What they did was the error they did. They just made a cash transaction, and we know that the cash transaction is credit entry. This is all they did. Okay, so for the books to balance or for the trial balance to come out, there will always be an issue with the suspense account. The suspense account always takes the other leg of the information that you don't know, or the account that you don't know about. So here, the suspense account is the one that represents the purchases account, the 12,300. This is what they did in error. Either they did only one entry, which is the credit. So the only way the trial balance balanced is because they had a suspense account in there to fix. So it took the balance. I already talked to you about the suspense account. That just is a balancing account that comes in to balance the debit and the credit side. And it comes in because of this particular thing of not respecting the duality concept. So this is the error they did. So how you correct that is correction is just like, so you just reverse the entries here. That the suspense account involved, so we have to clear the suspense account and do the right thing. The right thing was debit the purchases account. Purchases account. We're supposed to debit it, and now remove the suspense account because we have found where the money is supposed to go. So the money is supposed to go to the purchases account, which is 12,300. Okay, then suspense account, it had a debit of 12,300, but they're saying you remove it, doesn't belong there, so we're removing it to the credit entry. So as simple as that. You cannot correct an error, like I've already told you, if you don't know the right thing. So we're interested in only these entries. Allow me not to highlight. So maybe let me look at I, which Denise was interested in. And Kenneth, if there's any questions so far, you may ask. But that's a suspense account, how we deal with it. So since there are no questions, we can go to I. I is okay. The petty cash book balance of 7,100 was omitted from the trial balance. Now, petty cash, that's an error of omission. Error of omission does not affect the trial balance, so there's no suspense account involved. But